If the Fed chooses not to cut interest rates at the December meeting, mortgage rates would likely increase, and this would make it more expensive for people who are borrowing in order to buy a home. This is why high interest rates tend to hurt borrowers. It increases the cost for those borrowers. But higher interest rates actually also benefit savers. If you are already a homeowner, so you have money saved up in your home, or you have a lot of money in the stock market, you can use that money towards buying your next home, and you can avoid having to borrow, and you don't have to compete with all of those people who do need to rely on borrowing in order to afford a home. This is why it's right now actually a pretty good time to buy a home, assuming that you have the money to do it. Mortgage rates have been high for a while now, and that's why the share of first-time homebuyers in the market has hit a record low, and the age of the typical first-time homebuyer reached a record high of 40 years old. It is taking longer and longer for first-time homebuyers to be able to save enough money to be able to afford a home in this market. So unfortunately, it looks increasingly likely that mortgage rates are going to stay high. And that means the housing market is probably going to stay in this state where there aren't that many home sales happening and first-time homebuyers are at a big disadvantage. All we can hope is that inflation does cool down so that the Fed can lower interest rates and maybe things will improve later on in 2026.